The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are having a good Friday morning here. Not a lot of news today, so the markets may kind of dry up as we get through the opening, and all the guys on the desks are thinking this might be the last Friday. The leaves are kind of blowing here, finally off the trees. They may hit the mountains or the coast before it starts getting super cold up north in the New Yorks and the Chicagos of the world. That's what I used to do. And not a lot of movement here. We got. I'm looking at the Hang Seng right now. Interesting situation. We've come off. This is the weekly on the Hang Seng. We've come off pretty big here as we came off, from the spring until, basically late summer. But we got a little bit of a consolidation action here, sitting above these profiles on the long term on our weekly that we looked at, 22,621. I know that you guys probably are not trading the Hang Seng, but it's an Asia index. It's highly watched. I've spent a lot of time in Hong Kong, and it's very closely associated, obviously, with the Shanghai and the A shares and the B shares and all that kind of jazz. If you guys want to look into that a little bit further, just get on the internet and start exploring that concept. But here's the Shanghai. Again, found a new profile this past week. Still, this is our daily. So now stops literally raised a little bit. 35, 34 below there is going to be kind of where you need to rethink the intermediate trade. But 33.12 is that big number that we kind of pogo sticked off of, closed above, consolidated, used it as a high probability setup. I am hearing, you know what I'm hearing? I got a new chair here, and it's making leathery sounds. I thought somebody was following me or watching me again, and I always think that in general. Let's see here. Euro. This is, again, find the resistance, sell it. I got chopped up a little bit yesterday on this. Got above, my most recent area that I talked about on 107.10 on the euro. Now we're back in business, and we've actually got some fundamental news out there. If you guys have been watching what's going on or reading, the ECB, what was this, a year ago? And it, let me pull up our weekly on the, that's the daily. Our weekly, the big number's been 109. That's been, stops above on a long-term trade. This is really cool how this is setting up and working. We're getting near these, 105, 104 lows again. There's that 135.52 we talked about on the long term. And was it Robert in Buffalo that called yesterday? Was that Robert? Let me I'll find out on the break. But Robert can't see these charts, so I'm going to keep that in mind and give out numbers as much as I can as we're looking at these visuals to try to help him. So 135.52, literally that was what, summer of 2014. That's where we started breaking down below these profiles up top on our long term, and we haven't really had a close or a breakage of rules using profiles to scale this down on the long term all the way till now. And we've talked about par is the goal on this particular currency versus the dollar. That means we want this to get down to 1. And we've been trying to find resistance areas to sell whenever possible on the long term, weekly, or on the intermediate daily. And that's the way I personally trade, is I look for these longer term inflection points and try to get some, some kind of bias opinion around these inflection points, and the biased opinion has been, don't get off the short gas pedal. Here's the situation on the daily, on the next time frame down. We talked about this 107.10 to orient stops around and try to lever off of. And, the next stop up was 108.17 was going to be something we were going to try again. That just completely didn't happen. We reversed. I actually lost on this yesterday. I got stopped out. Went a little bit too much into my pain threshold, I guess I'll call it, for being wrong. Now we're back in business, and I'm going to do the same scenario with the same stops around that, above that 107.10, based on my appetite for risk. And that's the way I'm looking at the euro. And you've got, I expected this to react a little bit more so towards the downside of these ECB guys coming out, as they've done before, saying we're going to use all available measures. Now they're, reiterating that basically in a sense. And they're saying, and I'm quoting this, the ECB is prepared to deploy its full range of stimulus measures to fight low inflation. Okay, so what does that mean? They're going to play the print money game, and they learned it from us, or cause money to be worthless. Let's take a look at which I have no earthly idea. I'm gonna just kind of, gold is moved up. I don't know on this news, but we're getting back up into that 87.90 area again on gold. That's where we kind of want to pick a battle on that. We'll get into that in a little bit, but I want to reference the Australian dollar really quick, because this is something that we talked about staying away from on the short side. Remember, and I'll review this, and this is hopefully a really good education little piece here. This is exactly the same thing I just did this Bloomberg report on that was released yesterday. Same concept, very simple, long-term, something to be aware of when this happens. This is long-term weekly on Australian dollar. And, again, summertime into fall 2014, we had this thing break stride from long-term profiles down. Haven't really had a lot of opportunities to look at this any other way. It's something happened spring 2015, but it was kind of short-lived. But as we looked at this divergence in Navigator down below, and I think his name was Robert. Robert Buffalo. We made lower lows in price action and higher lows in Navigator long term. Now that just puts this concept in our head when that happens. Got to look at the moves now with suspect eyes. If the Australian dollar, has a chance to go down again, all right, bet relative to profiles, because, we've got this divergence pattern in where we made lower lows on price action, higher lows on Navigator. And I'll let you know when the things that we're looking at are setting up like this on a long-term basis. I'll alert you to it, all right, because Navigator's not in the scanner. But we have put in the scanner some very cool algorithmic custom sorts here, breakouts, breakdowns, things like that. And I'll show you something I made a little mistake on yesterday in the scanner that I, kind of freaked myself out on. But I'll show you how to not do that. So the Australian dollar, we finally got back above now this 71.69, 71.70. That's what we talked about had to happen, especially on a weekly close, to start using this. And Friday today we're going to have a weekly close. Very good chance we're going to close above there. Now we can use that as a little bit of a contra trade against a long-term trend down, stops below, to reach targets of 74.40 up top. All right. So let me state that again. Now that we've kind of poked our head back above into the balanced area from below, bottom of the box or bottom of the profile, 71.70. Now we can start looking at that to orient stops, to have a super cool risk reward scenario with targets up at 74.40. All right. Now you may be saying, okay, well, God knows, Logan, the dollar you talked about going to 100 and even higher. I'm still a big fan of that. Had a little bit of a pullback in the dollar yesterday, but look at this. The reason I'm saying this is the Australian dollar really doesn't care about this too much, and the dollar moves higher. The Australian dollar can move higher. here's a new profile on the dollar while we're talking about it. 98.90 is now the new support for the dollar on the intermediate to drive that long-term target of 128.29 up there. All right. You got a top of the profile here on the intermediate, 99.67. I'm just going to ignore that. I'm just going to try to ratchet up my stops just like we had here. We found support to the tick on the dollar recently last week at 98.45. We talked about that. I'm going to use the same concept here. Turn the rents the same way. Stops below 98.80 now. And then we're going to, hopefully just let this thing unwind and overshoot 100. And we're going to try to take some off the table at 129 on this. But the long-term trade is what I'm interested in the dollar. The day trade part of it, trying to ignore it right now. Just like the euro, just trying to stay on course. 1,000 points of light. Not going to do it. You guys don't remember that on Saturday Night Live back in the late 80s? God, it seems like yesterday, the late 80s. Incredible. As Tom was talking the other day about, God, we've been working on this almost for a year and a half together. It seemed like yesterday I just started here. I mean, I remember wearing a blue shirt. I had a beard. Whole life in front of me. Here we go. 10-year. Talked about this one. All right. Targets 127.11, 127.19. Talked about leveraging now stops below 126.17, 18. Stops below 126.17, 18 on this trade. And we're going to try to trade this against that long-term trend down to try to get a pop here up into 127.11, 127.19. Tammy, the 80s wasn't my first car. You don't even know what happens in North Carolina around here. You don't even want to know. We could talk about that privately. I did a lot of hunting when I was young, and we used to drive, when I was very young, a vehicle across fields and have shotguns hanging out the window, but that was a whole nother lifetime. And that was I'm sorry, I'm even telling you guys this. Here's the Japanese yen. We're going to come back after the break and not talk about me driving a vehicle underage with the shotgun hanging out the window. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Thanks for coming back, and thanks for enduring my childhood stories. Here we go. 120, the yen. Listen, I am not a big fan of shorting this product. You guys watch this show, you know what I'm talking about. I love how this thing's acting. Still looking at stops below 122.60 down into 122.55. Stops below there, and I usually look at the height of the box. Do a little math there and kind of do my stops as a percentage of the height of the box. Why? Because that's kind of my these boxes don't, they're not the same every time, and they get a little wide when there's some volatility. They predict that because they output first. You don't have to do anything to set these, is what I'm trying to say. So as they have their span or, volatility range, whatever you want to call it, of the balanced area, I usually do like a 10-15% of that a lot of times for my stop, and just that's it. That's kind of my system. So as we look at the end, this 60 area is very close to 55. I don't necessarily totally like how it's not jumping off this area, but I'm expecting the dollar to go higher, and just looking at that as another trade. And again, my life savings are not put on these particular scenarios. You got to spread the risk out. I mean, I'm wrong, I would say quite often, but I'm right quite often. So the name of the game is the math will work out in your favor if you spread things out, not put all your eggs in one basket, and look at the risk reward scenarios. I mean, if your targets are, let's just say you're looking to make $3 every time you lose one, and you're right 50% of the time, then that math will work out in your favor unless you're paying some kind of egregious commission scheme game. And to be honest with you, if you trade quite a bit and your commissions aren't right, that will grind your account down into a problematic area. So I'm a big fan of waiting patiently for things to set up, trading a little slower, and even if the commissions are what they are, that's not in the grand scheme of things, it's not a huge factor in your trading plans, basically. So question about the TAS breadth odometers update. Okay, so this is something right up here, these odometers. We have this set to update every 60 seconds, and if you use this scanner, you'll see it kind of freeze up about every 60 seconds to input more information. That's why this is so quick. I can go in here and I've got the S&P 500 up on my dashboard right now. I can add Singapore, I can add Shanghai, and this happens instantaneously because you already have all the information available to you locally because we send it to you every 60 seconds. So in a fast market, this will not necessarily update on the 60 seconds. Sometimes it could be even 2 to 3 minutes, to be honest with you. It's set up more for long-term moves and inflection points that are able to be relied on with some guidance from the breadth and things like that. What we're doing two things. One of them is we're adding more servers on our kind of bank in the cloud to make this, even in fast markets, not have any type of problematic situations. This thing is it's dealing with over 3,000 instruments. And those instruments on 4 different time frames, and there's a lot of other things going on in the background, calculations to do these custom sorts, all kinds of things going on. I'm not making excuses, but we are going to add more servers. Who asked that? Tucker. And that's one of our plans. We're also shifting our lower term time frame to 40 or the 60 minute especially. We're going to do a Nadex grid, and we're going to offload those particular Nadex products onto a separate bend altogether, and that'll have to be more than likely maybe even a 30-second update. So we got a lot of things in the hopper, but this scanner is just incredibly useful even as it stands right now, and we've done a lot of work on it. And I will show you one thing that I found out yesterday that I was in breakouts and I unchecked my S&P 500 and watch this. So I go back to breakdowns, then I go back to breakouts. If you uncheck some things, you got to remember to check them back, because I was like, what in the world? There's no breakouts in the S&P 500. We'll give that definition of breakouts when we come back, and breakdowns, and get into some other logic behind this that I think you'll find very useful. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I'm looking at copper right now. Copper's obviously, if you're a builder or anybody who's been watching commodities in general, I don't have to tell you, this has been a very slow, brutal downtrend here. Had some opportunities on the short side because of the situation, the dollar, all the news that's come out on slowdowns, things like that. A lot of these commodities have just evaporated in price. And here's something I want to kind of point out, though. Excuse me, on copper. We're around $2 here. We've got a new profile attempting to appear here. I think we'll see it today on copper. That'll be relatively supportive on this. And again, things on the lows go lower. Always remember that. Always remember to put your stops in. But you got a profile here you may be able to explore as a little bit of a trade only, not a long-term investment yet, because we haven't had any real serious turns here. But we've got a chance. New demand area will be sitting there, and you can orient stops below. So pay attention to that one. And you can pay attention to that one right here in the scanner. There's copper. There's that yellow peel back. As you can see, right across the board, that's 71 number in the arrow down. I'm updating the help doc on this. Don't worry, it'll be in there. Updating literature, if you write software, and that's a a never-ending endeavor. So I'm spending all weekend doing videos on this particular version of the scanner. I was kind of waiting because this thing was in flux forever, but it's not going to change a lot for a while, except for some new algorithms and tweaks to these algorithms on some of these pre-canned filters. So 71 arrow down means we haven't really broken stride in our 240 profiles. I'll show you that. It's kind of a cool thing to be aware of. See there, 71 bars since that area. So it lets you know, even though we're in the balanced area, so to speak, that's what we're looking at. And I'm hoping that these daily profiles appear. And going back to copper, where are we at? We're going to reorder these, by the way. So it's a long story. So they're kind of all batched together in the sector that they're in. We're trying to make headers for these right now, but there's not a lot of futures. It's not hard to find things in this grid. But as I look at copper, that yellow pillback's really, really important. We're going to pay attention to that and see where the new profile lows are. They may be, to some degree, as similar to the 240 lows here that we can orient stops below. And for Robert, don't know the numbers yet, but those 240 lows are 2.07 right now. Dollar's probably going to head higher. You got to keep your eye on this one. It may actually reverse a little bit, but see how it acts with the dollar possibly going higher, and then you might have a little bit of a relative strength trade going on there. Let me see here. Let me read the DIN. Here we go. Peak T, that's possible. Sub 2 on copper, just to do it, just to wash some people out. A lot of times things like that happen in trading. Tucker, the red, green, blue colors on the odometer represent percent above, green below, blah, 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 blah. Let's see, which is a quick look. However, I see some yellow on the odometer also. What does the yellow mean? Okay, so let's answer that question. So he's asking, and I'm going to my dashboard here. Actually, let me go back to the indices section. You'll notice there's three colors. There are three colors, to use proper English, on the odometers, on the speed dials. And I'm going to go to the S&P just because everybody's kind of watching this. And what this means, that yellow, this is a great point, Tucker, because I think everybody can get some use out of this. What this means is that, and I'm going to drill down into this. This means that there are 29 stocks in the S&P right now on the 240-minute profile where new boxes above are attempting to appear. All right, now that means that we're going to have new supply up top, and that's an indicator in itself. I wouldn't call this, when this number starts getting above 10%, you got to kind of look at, okay, wow, we may have a trading opportunity. On the short side, you got to also keep in mind those inflection points in the long term and all that kind of stuff that we talk about all the time, because this means that we're shifting. A lot of these stocks that are trading above are not going to be shifting into a profile, okay? And then they're going to have to contend with that. So that's kind of a slow down, profit-taking type scenario, and maybe a little bit of a chance to look at that as a short indicator in itself. I actually used to talk about this. I haven't gone back to it in a long time. I'm glad you brought it up. Right now, so for instance, that yellow, okay, these green, yellow, red, and blue, there are four colors, and I'm sorry, I said three a while ago. This is a graphical representation, and if you look at these speed dials, you see a lot of red there, similar amount of green, and then more blue. It's a graphical representation of these numbers right here. Okay, so the yellows, there's not many yellows on this 240 grid. It's like a smidget, and that means that there's only 4 here. There's 29 up top on the yellow. That means new boxes attempting to appear 29 up top, 4 below. That red means that there are 40 stocks in the S&P 500 trading below profiles, and there are 270 trading above. So these are all graphical changing these color grids are changing representations of those numbers within the speed dial. So you're getting a net profile breadth positive here, which is a simple math calculation that we're doing, but you're also getting these color representations as you look at the speed dial to kind of tell you a little bit more about those 5 conditions. Profiles attempting to appear below, stocks trading below profiles, stocks that are trading within profiles, stocks that are trading above profiles, and then stocks trading that are attempting to appear profiles above. God, I probably didn't say any of this right, but I think you guys get the picture. It's basically a color grid representation of these numbers right here. Tucker. Okay. And then at the same time, when you're looking at these conditions, and there's no product out there. I'm not trying to be a sales guy right now, but there's not a product out there that I'm aware of, and we've looked pretty hard for somebody's trying to do something like this, that takes a profile type look, a market profile, our derivative, and displays information like this. This is extremely valuable. We've done a lot of back testing on it, and I stand by it. And we've got a price chart down below, but you can look at how these things have acted over the time, and also get these inflection points. Instead of having to go back in the scanner and find them on the S&P levels for those time frames, if you'll notice these change down here. A lot of information in this scanner. Let's see. Peak's asking JL, that's me. Are you able to set alarms on the 240 speed dials to let you know the situation is changing? You know what? We used to have alerts a long time ago. We kind of threw them away. Audio alerts, visual alerts. I think we're at the stage where we probably need to put those in. And those will be really, really beneficial, I think, not to miss things, as you're probably alluding to. So I put that on my list here. We've got some other things left to put in the scanner, but yes, we will put those in because I think those will be pretty cool. The thing that I think is really cool about alerts, Peak D, is when I've got my custom list set up, and when I set up a custom list, I'm going to go add list, and I'm just going to call it Peak D sample. I only can put 10 characters in there, not 10 symbols, 10 characters. So as I set up my list, I'm just going to, IBM, the bane of my existence over the years. We're going to look at Procter & Gamble, and we're going to look at the Mini, the ES Mini. We're going to look at Coca-Cola. And remember, you can set up your list to, incorporate a ton of overseas instruments. So if I want to look at Saudi Advanced Industries, let's see what else. DOW. How about Dow Chemical? Okay, so we've set this up. We're going to save the list, and you can move these around, reorder them. Oh, I got to hit that. That's the way I do that. Okay, so you can put them in whatever order you want to by kind of moving them around in here. I'm going to hit Save List, and I'm going to go to my home screen, and I'm going to go to my quick navigation, and I'm going to add, yes, Peak D. I'm going to show you this. This is my list for today. It was to develop the 5 longs and 5 shorts, and we're going to start that Monday. Somebody suggested that the other day, and I think it might have been you, to track some picks, basically, that we will follow. Okay, cool. So I can become a hero or get shamed. How about that? So let's see here. Hold on. Custom list navigation. Okay, here we go. Let's add this to our navigation bar. There we go. It's right there. And we're going to hit save. And we're going to go back to my dashboard, and it should be available right here as a list. There it is, Peak D sample. I'm going to click on it, and it's going to pop my list up. Now, what I think would be really helpful is if I'm watching my world that I want to live in of my kind of custom portfolio or whatever you really want to kind of pay attention to in general. I've got the Saudi stock, a future, and about 4 S&P 500 stocks. I would love to be able to set conditions, which we've already got this code available. We just have to implement it. Set conditions that alerts me when the stocks in my world are doing certain things, breaking certain levels, turning around, things like that, instead of, having to go to, let's just say we have uptrend reversals. We've got this little algorithm going to identify these. These are all the custom sorts, by the way, in this particular scanner are based on weekly and daily. There's a hint of 240 in some of them. But in the videos that I'm going to do this weekend, I'll explain the logic, and very simple logic based on profiles, previous bars, previous boxes, previous balanced areas. We've got a lot of that in there that you can't do. See here, it says custom up here. When you got a custom sort on, you can't really mess with it because it's actually doing things other than just looking at these 4 time frames and the conditions within those time frames. It's actually looking at previous bars and things like that to give a little bit more edge on these particular sorts. So the Peak D SAMP that we had up, we're going to go back to, so you'll be able to set alerts and we can have them emailed to you and all kinds of things from those alerts. So that's next on the horizon. I think this thing's chock full of cool stuff right now, but we're always open, Peak D, to, man, these are great suggestions. And, we've even got, if you go to instruments, this section called, let me just get rid of the S&P here. There's a section called Other. These are actually stocks that people have asked us to put in. So, feel free to send in some things, as long as they're not, stocks that are trading a penny that nobody looks at except you. Try to, keep that in mind. Some usual suspects that people look at that are not in the S&P in general, we'd love to put them in for you under that section. So I'm going to take that out. I'm going to go back to my S&P for my dashboard. And we're back to the S&P here. Peak D all over that. All right. So let's go to our ETFs for a second. We're going to get a break in about 20 seconds here. On my daily, I want to see, what's kind of lagging, what's hanging behind XLU, the utilities, and the energy stocks without question. And the 4-hour and the 60-minute, XLE and XLV. So we want to look at the XLV when we get back. It's not participating that well right now, and we want to drill down into that and take a look at it when we come back from break. So we'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. I want to show gold here. Haven't talked about it a lot. 1086, 1090 is that big area we got to stay below. And I still feel like this thing could go lower. I want to show you what happened yesterday and today already. There's, this is a 60-minute chart. This is kind of, again, we get down into that 1060 area, and we always look for high probability setups, and those retracements back up into those major long-term inflection points are what I really like to look at. And I'm also paying attention to the short-term stuff when it comes to the profiles. But we hit yesterday high, we hit 1086, 1087. Today we've hit 1086, 87. We're backing off again. We're kind of compressing up into it. Not staying away from it is a little concerning. But again, those numbers provide some decent little trading opportunities on the day trading side even. And again, those long-term inflection points really have a lot of relevance in my book. So that's the situation on gold. Still got stops above 1090 on my gold trade. Silver, not may have a new profile attempting to appear here. I don't know if that yellow bar is going to stay in force here, but not as excited about silver. I talk about that all the time. We got to look at crude oil. I haven't covered crude oil. Al. Yeah, we got below 42 76.43 and got a weekly close. This is our weekly book here, our weekly chart here. And what we want to do is now notice that we have to get back above on the long-term trade, back above 42, 76, 43 to look at this from the long side on the long-term trade. Here's our daily on crude oil. There may be, this is not the action you want to see. It looks like we're going to do a flush below 40 and wash some people out first before we do anything different on crude oil. So that's the situation there. Let me see here. Okay. All right, we're going to go back to the Aussie dollar again. Put a gun to my head. This has been one of the stocks, the instruments we've been talking about trying to get long above 71.70. That's happening now. We're getting some legs actually as we speak. Here's our 240 lurching forward. Remember, the targets on this trade, in my opinion, are going to be that 74.40 area up top. You're going to have some congestion around 72.77. You're going to have to, short-term guys are going to have to pay attention to that number, maybe take some weight off and wait around for some new short-term profiles to appear. But ultimately on the long-term trade, and here's our 60-minute going higher now. We've talked about staying away from this on the short side and wait until we got some confirmation back in the balanced area. And ultimately, I think the goal up here is attainable 74.40 on the Aussie dollar. And we talked about the reasons for this kind of trading against that long-term trend down and getting some points on the board based on exploring the entire fair auction of the long-term profile there. All right. Going back to the S&Ps, we've got about 20 seconds. Big number up there is 2089. I hate the way this is compressing into it. But again, I think you got to put stops above there and trade this, maybe a little bit of a contra trade from a day trading standpoint. Long-term breath still in your favor here. Talked about above 2063, getting that breakout on the upside. Stay tuned, guys. Larry's next. Stay tuned for Larry, David, Steve, Andy, Tom, Tommy, Basil, and Daryl on this network. Stay away from CNBC, guys. Listen to TFNN. Have a good weekend. I'll be back Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.